Assalamualaikum and hi to everyone. So today me and my team gonna present to you guys about taxation. Our team have 4 members. First is AMIRUDDIN, second is FARHAN, and third is NAZMI, and last one is IBUN. It's me. So we can start now. So what is taxation? Taxation is a term for when a taxing authority, usually a government, devise or impose a financial obligation on its citizens or residents. Paying taxes to government or officials has been a mainstay of civilization since ancient times. Taxation occurs when a government or other authority requires that a fee be paid by citizens and corporations to that authority. The fee is involuntary and as opposed to other payment not linked to any specific services that have been or will be provided. Tax occur on physical assets, including property and transactions such as a sale of stock or a home. These type of taxes include income, corporate, capital gains, property, inheritance, and sales. So, this one is objective of taxation. There have 3 objectives for taxation. First is economic development, second is full employment, and third is price stability. For the first, for the economic development, one of the important objectives of taxation is in economic development. Economic development of any country is largely conditioned by the growth of capital formation. It is said that capital formation is the kingpin of economic development, but LDCs usually suffer from the shortage of capital. To overcome the scarcity of capital, government of this country mobilize resources so that rapid capital accumulation take place. To step up both public and private investment, government tax revenues. Through proper tax planning, the ratio of savings to national income can be raised. So for the full employment, since the level of employment depends on effective demand, a country desires of achieving the goal of full employment must cut down the rate of taxes. Consequently, disposable income will rise and hence demand for goods and services will rise. Increased demand will stimulate investment, leading to a rise income and employment through the multiplier mechanism. So the last one is price stability. For the price stability, taxes are regarded as an effective means of controlling inflation. By raising the rate of direct taxes, private spending can be controlled. The pressure on the commodity market is reduced, but indirect taxes imposed on commodities fuel inflationary tendencies. High commodity price on the one hand discourage consumption and on the other hand encourage saving. Opposite effect will occur when taxes are lowered down during deflation. For the next topic is scope of charge. Scope of charge have 3 types. First is territorial basis, second is foreign source income, and last is world scope basis. Based on territorial basis, income tax is only chargeable on income accruing in or derived from Malaysia, which is Malaysia's source of income. For foreign source income received in Malaysia by any person is exempted from income tax according to Income Tax Act 1967. So So for the world scope basis, there is an exception in which the residence company carrying on the specialized business includes banking, insurance, sea and air transport are assessed on world scope basis. That is income wherever derived even though the income is not received in Malaysia. For the next topic is type of taxes. There have three main types of taxes. First is progressive taxes, second is regressive taxes, and last one is proportional and flat taxes. For the progressive taxes, this is the type of taxation where as you have more income that is subject to tax, you pay higher average rates. This mostly relates to income taxes. The term progressive comes from the fact that as taxable income increases, the tax rate gets progressively higher. The federal income tax brackets are an example of progressive taxation. The federal governments use marginal tax rates which tax income within a certain range at one rate and income in a higher range at a higher rate. Progressive income tax may also be referred to as a graduated income tax. So next is regressive taxes. Regressive taxes is the opposite for progressive taxes. This is a method of taxation where as you have more that is subject to tax, your average tax rate is lower. For example, is the social security tax, a type of payroll tax. All taxpayers need to pay the social security tax. For 2019, income up to 132,900 is subject to the tax. The higher your income goes above that limit, the lower the average rate that you pay. So for the last one is proportional and flat taxes. Proportional and flat taxes is one where the amount you pay is proportional to how much you have. You will also hear people refer to this as a flat tax. For example, imagine you live in a state with a flat income tax of 5%. Each taxpayer will pay 5% of his or her taxable income. Since everyone is paying a proportionate amount of their income, this is a proportional tax. So, thank you.
Hai, Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad NAZMI bin Muhammad ROSLI. My ID number is 1905171. So, I will present to you all about classes of income, basis paid for individual and also for a company, and lastly is year assessment and judgeable person. Okay, let's go guys. Okay, first one is classes of income. Okay, they are consist in this act consists of 6 section under section 4, okay, which is for section 4 subsection A told that gains or profit from a business for whatever period of time carried on, and section 4 subsection B gains or profit from an employment. Section 4 and subsection C tells that dividends, interest or discounts. Next, section 4 subsection D rents, royalty or premium. Section 4 subsection E pensions, annuities or other periodical payments not falling under any of the foregoing paragraph. Okay, last one, section 4 subsection E gains or profits not falling under any of the foregoing paragraphs. So these 6 sections are provided for the classes of income. Next, we proceed to basis period, basis year, and year of assessment. Okay, let's go, guys. Okay, first of all, basis period for individual, which is the income source of a person other than a company, trust body, or cooperative society, will be on calendar year basis. Next, this is to facilitate the taxpayer on estimation of income tax, payment of tax, and submission of return, not later than 30 April or 30 June of the following year. So this is basic period for individual. So next, let's see about basis period for a company. With effect from year assessment 2004, only company, trust body, and cooperative society can have its basis period for year assessment to be on calendar basis year or non-calendar year basis. Got it? Okay, let's go to year of assessment. Okay, this is important. With effect from 1 January 2000, Malaysia moved towards the implementation of current year assessment. This resulted in the assessment of income tax to be concurrent with the derivation of the income. Example, I give you example. The basis year for the year assessment 2016 is calendar year from 1 January 2016 to 31 December 2016. So that is example. Okay, there are 12 months. Okay, last subtopic, which is chargeable person. What is chargeable person? Chargeable person is under section 2 of the Act defines persons to include a company, body of persons, and a corporation soul. And next is body of person is further defined as an unincorporated body of person, not being a company, including Hindu joint family. What is Hindu joint family? Hindu joint family and any income of the family manager or karta in his capacity as such being income by virtue of section 55 to section 59. Yeah, that's all from us. Thank you for watching. Don't forget to like and comment, guys.